Hello and welcome to another episode of the Frontiers. Frontiers is a podcast that talks about Web3, what is happening in Web3 in Africa, where it's going, and frankly, where we're coming from and where we're going to. Podcast is hosted by Dennis, Isaac, and Jeffrey and Jordan. We are all Web3 builders at UK, building the next generation infrastructure to empower Web3 adoption across Africa. And today we are talking about an interesting topic. We are talking about builders mentality, what is happening right now in crypto and in Web3 generally, for builders specifically. Is there still an incentive for people to build in Web3? Is there still an incentive for people to build applications for Web3 users? Is there still an incentive for adoption? Is there still an incentive for growth in this space? Because we kind of like very clear that over the last 12 months, the number of crypto startups have fallen by 98% since early 2022. The number of people building in crypto has fallen dramatically. Startups have folded and shut down. And according to data that we've seen, like the top 10 categories of sectors or building sectors that most founders or builders actually focusing right now is we are seeing more folks focusing around security, gaming, infrastructure, and wallets, and also payments and stable coins. But prior to this time, we have things like NFT, DeFi, DAOs, and on-chain tools above ahead. So what we are seeing is like kind of like a dramatic change in the builder's mentality. Like the bull markets and the bear market narrative kind of like comes with different incentives for builders and people building in Web3. And today we're going to be diving into this very important topic. And I can't wait to bring up my guys, my people. Jeffrey, I don't know, like can maybe say hi and just say one or few things about today's topic and what you think about it.
Hi everybody. It's a pleasure to be here again. Yeah, I feel like this is a very, very big topic. Like Dennis said, there's been a lot of decline in the rate of projects being built on the Web3 space, and there's also a lot of decline in the noise too. Like there's almost no noise or any news on Web3. It's only like the core and hardcore believers that are spreading the news. We don't have all those buzz we used to have before. So yeah, and that is basically because right now we're in the bear markets. And that's why our topic is about how to build projects to stand the test of time, stand both in bull markets and bear markets. And I feel like a very big reason that a lot of startups in blockchain or Web3 failed, like Dennis said, is based on flexibility. I feel like in the blockchain space, there's a lot of changes, there's a lot of developments, there's regulation, there's so many things, there are security risks. So they're like security concerns. So to be like a very good blockchain startup right now, with all of this, you really need to be able to you really need to be flexible. You need to be ready to change with the times, basically, because there's so much technology coming out. There are some things consumers want, they don't want. Sometimes they change their minds, right? So you always need to be able to be flexible. You should be able to easily bring things on board and remove them while still keeping the core values of your product, while still like keeping the core mission and vision of your product or of your company. So yeah, I feel like flexibility is definitely a very, very big issue that a lot of startups had that made them fail. Also, community engagement. I feel like community engagement is also very, really, really important. I feel like you can't overstate community engagement, especially in Web3. Regularly, it's always the companies that have good interactions with their consumers, with their clients, that are giving them feedback, that are giving them the news, that kind of boosts the relationship. And even though it's a bear market, they know you have their back. So they're definitely always going to be using your products, even if it's just because of the relationship you have with them. So I feel like community engagement and flexibility are two of the most important reasons why a lot of startups are failing right now in the blockchain space.
Yeah,
About you,
definitely
Dennis.
right. I think what we're saying is kind of like it's kind of like avalanche of failures, right? Like you have like people are running away from building crypto, like they don't see an incentive again to actually build in crypto generally. And I think, Isaac, we've had these discussions before in the past, and we've also like kind of like talked about this because we are an infrastructure company by default, and we are seeing the decline in interest from people. Like, I don't know, like, what do you actually think about this topic today? And then like what's your first hand insights into what is going on in the crypto space generally when it comes to builders? Like, where have they all gone? Let me just ask a simple question.
So I believe for some, most people have this idea that most of what's going on for Web3 and crypto is speculation and the likes. And then, so it's and then for some, Web3 is all about creating value. And then for some of them have this idea that Web3 is a get rich scheme. And then I believe that what I believe is that people who are no longer there anymore are those who probably assume Web3 was a get rich scheme. They thought that they could just come and experiment and get away with whatever it is they wanted they will get away with. But this time has become very hard we should call it hard and trying times for them, because they were not able to stick around and keep building for the value that they were supposed to come and create for. They were coming to create based on experiments that they had in their heads, and it failed them. That's what I would say. What I believe is that those of us that are still around and building are the ones who had an idea and we had a vision, and that's what we are working towards.
Definitely. I think this is actually a very close call to home for us here at Yuki, Comic Block, our two products, because last year November, when FTX hit the road, right, there was these questions we've been asking ourselves, like, what's the next thing for us? Because we see dramatic like drop in user engagement, and people stopped coming, because we had this digital asset portfolio in products. So there was this drop from people trying to invest in Bitcoin and the rest of that. So that for retails, there was very sharp drop in retail adoption and investing, especially in Africa, where you have like majority of the consumers are low-income earners. And then we kind of like pivoted, right? Not kind of pivoted, but we kind of made a very quick pivot to introducing stablecoin savings into the product. And I'll be very honest, that actually kept us going, because we kept true to our value. Because one thing I've seen from builders and from developers in Web3 is there is so much narrative built around like something that is not reward applicable. So when a product doesn't have reward solution impact, I would say, let me use the word impact. When the impact ratio to a product is kind of like reward impact ratio for a product is kind of low, it's kind of very hard for people to actually come and say, oh, we are solving this. And at the end of the day, like you're like, how will I say it? Like most products in Web3 doesn't translate to reward usability. And if it doesn't translate to reward usability, it relies on hype to go. And when it relies on hype to go, it's now kind of like it's hard for founders and builders to actually scale, whether in bear market or bull market, and continue building. And as Isaac and Jeffrey mentioned, like is remaining true to yourself as a builder actually makes a lot of sense, because what are you true to? What is your conviction? Because for we at Yuki and Comic Block, we are very convinced that Web3 has its place in Africa, and you can see the testimony of that conviction in our both products, right? We kept innovating, right? So I think that's the mindset everybody should have. But like that actually leads us to the next section of the topic, right? What we are seeing right now, there is so much pressure, like regulatory wise, compliance wise, on builders. And what we are saying is that, like at the end of the day, you are saying like a more blockchain that is no longer like kind of like a more blockchain, the primitives of blockchain, like self custody, on-chain transparency, we see like because of companies are trying to optimize for profits and optimize for survivability, like we see so many of them are doing very crazy things, right? Jeff, I don't know, like what do you actually think is happening right now? Because around this transparency and also around the like most builders are deviating away from what makes the blockchain and trying to experiment other things to actually survive generally in this weirdly sad bull market.
Yeah, thanks again for that. Okay, so I feel like you said something about companies diverting from the core blockchain values, which is transparency and trust. That's like the principles in which blockchain is based on. And most blockchain products, they kind of like don't have that transparency anymore. You have a blockchain account and you don't even know what address that account holds. They just give you like you just have your you just have like your token values or your balance on your website, sorry, on the app. But it's a blockchain product. You don't know what address it is. You should be able to check that on whatever scan site it is connected to. So because it's in ledger, so you should be able to, every account has like a balance on the actual ledger on the blockchain. But a lot of products are deviating from that. So in a way, it's kind of like Web 2.5, because even though it's on the blockchain, it doesn't really have the actual transparency that the blockchain product should have. That's kind of like why I feel like that's kind of like what's happening right now. That's like the trend, and I feel like I feel like you can't really blame the builders, because a lot of Web2, a lot of people that are using Web2 products, they are used to that kind of approach. They are used to having and not needing to worry, not needing to check an external site or whatever to know their actual balance. So I feel like that is in a way, I feel like there's no bad guys there. But yeah, I feel like definitely builders could definitely have gotten a better approach. And for sure, there are also builders who have the better approach. Just that right now, the people that have more users are the people on the less transparent side. But I feel like along the lines, we're definitely going to see a trend and a shift from that direction. Because yeah, like you said, a lot of products that started in the blockchain space have ended because they didn't hold true to the blockchain values. They didn't really understand the technology. I would say they didn't really understand the technology, because I feel like if you are building in blockchain and you understand the core technology itself and not the hype, because a lot of people just know the hype. It's just the hype they listen to. Not a lot of people do their own research. I feel if you do your own research, you see that there's so much value. Like there's so much value. We've never started tapping to the value yet. We've never started with all the regulation, with all the security concerns, with all the talks of mass adoption. We've still not reached the value that blockchain has. So I feel if you understand the core as a founder, even though yeah, we have trying times, but you definitely need to adapt. So I feel like even though right now, like you said, the builders most of the products are not they're semi-transparent. They're not fully transparent like a blockchain product should be. But I feel like yeah, along the lines, in the nearest bull markets, for sure, I feel like products with better alternatives will take the lead.
Yeah, we are seeing a lot of folks actually optimizing around self-custody and the rest of that. But I think it all falls down to usability and the rest of that, because what we are seeing is kind of like a very dramatic decrease of consumer applications, people building consumer-focused applications, and we are seeing like more folks actually like there is this data from Alliance. Alliance is one of the biggest Web3 accelerators in the world. So they open sourced their 2022-2023 applications and kind of like use that to range and see the people that have submitted to join the application, what people are actually building and what is actually happening in the market. From what they are seeing, from what they are showing, they kind of like mention that between 2021, 2022, 2023, like security and privacy tools, like there was this what's it called 2.4% in 2021, and then 2022, sorry, then in 2023 it's grammatically grew, right, to 3.5, like almost 3% increase, almost 4% increase in 2023. Like people building security and privacy tools grew by almost 4% in 2023 against 2.49% in 2022. So like based on what we discussed right now about the transparency and security and the core needs of blockchain, like kind of like very, because after the wormhole hack of and then the Ronnie and the DMB breach hacks that happened in 2022, it kind of became very apparent of builders to actually have kind of like, because there was this urgent focus on security and privacy. So, and also on gaming, right? So like gaming really dropped gaming kind of like really dropped. The metaverse gang and the whatever collectibles gang, there was almost 77.5% drop in gaming. Like in 2021, we have around 7.75%. They had received up to 7.75% of the applications they received. 7.75% was kind of like gaming. And then in 2023, that dropped to almost 1.9%. So it kind of shows you that the hype train is going away and people are more focusing on actually building what actually makes sense. And then in the infrastructure game, we see like around like infrastructure grew by almost 23%. Like it grew by almost 23%. So like it means that more people are focusing on the infrastructure layer for blockchain to actually make sure that we can actually optimize this and have a better bull run whenever a new bull run comes. Then for DeFi generally, according to their data, the applications they saw, there was almost a 20% decrease in DeFi people building DeFi products. Like there was almost just 21% decrease. So that is actually very huge because it shows like at the end of the day, I think what we win and what we make a difference at the end of all these race on to adoption of 1 billion users is actually, I think, market maturity and real world application of the blockchain. Then for NFT, that wasn't a big surprise because NFT dropped by almost 5x. Like there was a massive drop in NFT. So like it dropped like very, very well. The applications they saw for NFT projects dropped by almost 98%. So I don't know. Maybe next time we talk about the future of NFTs, but for now, I'm kind of like, I don't have an opinion around NFT. Then for wallets, according to their data, right? So wallets grew by almost 8.49% from 3.8% in 2022. So that shows that definitely the wallet wars are on, and there is urgent need for people building. Builders are flocking to build a good wallet, which is actually a benign kind of something. Like it's a good thing that is happening because wallets by default unlocks adoption. If you don't have good wallets, nobody's going to use your products. Nobody's going to use Web3. Then for decentralized social networks, I think the Twitter issue, Elon Musk talking about Twitter, kind of like inspired builders to kind of like experiment with friend tech, right? You see friend tech issue, friend tech running around, like there was so much growth in that space. According to their data, it grew by almost 3.6% from 6.16% in 2022. Like there was a very increase. So like, because what we're seeing that early tools like layer 2 solutions are coming and solving scalability for Ethereum and other blockchains. So that is actually allowing builders to actually be more purposeful when they're building and gives them more, because decentralized social networks actually requires a lot of flexibility. You have to reduce the barriers for usability for users. Then for DAOs, generally, people building decentralized governance tools, it dropped very well by almost 81%. So I don't know the reason why. Then for stablecoin remittances and the rest of that, stablecoins, surprisingly, people building in stablecoins dropped by almost 50%. Like stablecoin payments, it dropped. So I would say I can't really say the reason why, because from what I'm seeing, what we are seeing in Africa, the reality is kind of different, because we are seeing a very huge increase of Web3, what's it called? Of Web3, of stablecoin adoption in Africa than other regions of the world. So, and then the final stuff is the oracles and the on-chain side of things. So like that kind of like had a very small drop, like around 1.9% compared to 2022 data. So like generally, I think from this data like Alliance, we are going to put a link on the show notes so anybody that wants to access that can actually look at that. So it shows that, like Isaac, it shows that there's a dramatic shift from hype to reality. Like it shows that people are more moving away from blockchain, blah 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 blah. We are the gang. We are going to destroy the banks. To welcome to your daddy's reality. Because we're always talking about it on this podcast, right? We always say it. See, you can't go to war with your father and win, 100%. So so like we see the FTX issue, and then we know that there was a very dramatic increase in regulation. I'm not a big fan of regulation, but I just believe that the current regulation actually helps the incumbents, the Coinbases of the world, the Binances of the world, the banks of the world. It doesn't really help. Generally, regulation stifles innovation, no matter how the regulation looks like. So free market should be a free market, an open market should be an open market. But I think where makes sense is on the compliance side of things. We should be able to make sure that people are not using the platform for bad stops. So you don't just kind of like launch down the sledgehammer on people, because there's this next topic we're going to discuss next about Chainalysis. Actually, whether Chainalysis is kind of an evil institution that is actually kind of like making it, how will I say it? Like, are they kind of like aiding bad regulation and excessive account monitoring in crypto? Do we have the good side, but there's also a bad side to every story. Maybe that should be in the next 3 episodes. So just stay tuned and always subscribe to kind of hear what we have to talk about. So I think I bring it back to the house, right? Because this data, it shows the move. Isaac, back to you. So like, I don't know, walk us through, right, on a free run. Where do you think we are heading? Like, where do you think we're heading?
It's quite, I think it's quite clear. And then if you look at 2021, 2022, we had while everybody was pursuing innovation, and during the process of pursuing innovation, most people got blinded by the purpose of how they can make money from Web3 and the likes. And then you see them, they ended up building systems like staking for rewards, building NFTs where you had to stake for this, or just like you said, NFT gaming and the likes. But we've now realized that there's something we said at the beginning of this year. We said something that where the focus is going to be shifting towards tools and real life applications where you can make use of. When you come to this platform, you're able to make use of this for real life application. Look at Africa, for instance, where we are having higher adoption for stablecoin, because we realize that this is where the value lies, and this is what we need for certain purpose and certain things, and we can easily get access to these things using this and using that. So people are going to build. The bear market kinds of sometimes maybe the bear market is even a good thing, because it allows everybody to go back to their drawing board. You spend more time to think, you spend more time to refine your approach, because you probably had a very wrong approach because of the euphoria of the bull market, and you were not seeing things clearly. You're probably blinded by what everybody was talking about, because this is the new trend and that's what I want to work on. But Jeffrey mentioned something. There's so many things there's so many untapped potential. So the bear market has made people to go back and sit down and reason and refine their approach, and they begin to touch things that are important for the market to grow. The things that would cause massive adoption in Web3. So, now we are beginning to see people come up with mad crazy things that will further drive sustainability and add value to Web3 as a whole. To add value
so
to Web3.
I think
very, very important.
Web3 is the only space where we normally have a hard reset whenever we messes up, right? True. Whenever we messes up, we have like a hard reset. Say, guys, come back to the drawing board. So the bull market gives clarity. So the bull market gives it gives the reality. Jeffrey, like,
gives you a knock on the head.
Jeffrey, over to you. Like, where are we heading? Like, are we heading for doom or are we heading for like where do you see this thing happening? I have my own reservations for the closing thought, so stay tuned. Like, Jeffrey, over to you.
Yeah, I feel like funny enough, I've actually not even the document you read. It's crazy. I've actually not even seen that, but I'll definitely check it out after the podcast. I was going to say that I didn't want to interrupt you when you're talking, but I'll be surprised if I see anybody launching any NFT collection at this point. Like, I feel like everybody already knows what NFTs are. So like, and yeah, there's definitely also been a rise in security tools. I feel like over the past few months, I've had a few companies reach out to me to test some smart contract security tools for them. So yeah, there's definitely been a lot of incline into security, and also like some articles I've been reading. I've been diving deep into security. So I feel like security is definitely going to improve over the next few years. That's for sure. Then yeah, I feel like once security improves, hacks would definitely have a very huge reduction in hacks. Then a lot of people, the fear of losing money would definitely be lost from people. So we'll definitely have a lot of people buy into the idea of crypto, buy into the idea of Web3 and blockchain. So I feel like we're headed towards clear roads and beautiful skies.
Yeah, we're headed towards Bitcoin and ETF approval. We are headed towards an ETF approval. So we're headed towards an ETF approval, and I believe is kind of like a very golden opportunity, right? So I think I just want to take this time out to thank our listeners. Isaac, do you have something you want to make?
I wanted to mention something. So for NFTs, NFTs took a very. I also want to add something to what Jeffrey said. So NFTs took a funny turn at the beginning of this year. So people figured out how to create NFTs on Bitcoin, and so they call it inscription. And then so that was So that was when their focus kind of shifted to, and then you see all the Solana boys and all the Ethereum boys, they ran all the way to go and inscribe to start doing inscriptions and uncommon sats, this and that. And that was when that.
At the end of the day, wow.
Market has humbled everybody.
We are back. We are back to square one. So I'm just grateful we talked about this, right? And also, it's been a very interesting conversation. Thank you to our listeners and to everybody that dialed in. We are doing very well, right? The podcast is really doing very well. We kind of like ranking the top 30 podcast in Nigeria. So I think that is a very good number, and we can't be doing that without you guys tuning in always to listen to what we have to say. Just rate the show wherever you're listening from. Give us your feedback. We need that to improve. The Frontiers is brought to you by Yuki. Yuki is a Web3 as a service infrastructure company building the future of wallets, custody, and compliance in Africa. From us to you, to everybody, good night, and have a good one, everybody, and stay tuned for another edition. Thank you.